Hello there. Welcome to the assessment and feedback session, day 1 in week 2. The focus of this assessment and feedback session is on common size analysis. As you can see here, this basically involves the expression of data, including entire financial statements in relation to a single financial statement item, or a single financial statement base. So all other items used in the financial statement are expressed to one single financial statement item. And the most common item used basically in analysis are assets or total assets for statement of financial position, or revenue for statement of profit and loss. Therefore, a common size analysis creates a ratio between every financial statement item and the base item. So if you're looking at profit and loss account, you're looking at every item, for example on the screen, cost of sales to revenue, gross profit to revenue, administrative expenses to revenue. So every single item to base item. For balance sheet, we do exactly the same. Every single item to the total asset. So we compare those items to the total assets. There are two main types of common size analysis. You have vertical analysis. This is used to denote a common size analysis using only one reporting period, as you can see from this screen. So in this case, we are looking at one reporting period and we're comparing every other items to a single financial statement item. And we call this vertical analysis. The second type of common size analysis is horizontal analysis. So this refers to an analysis that compares a specific financial statement with either the prior or future periods, or even to cross-sectional analysis. A cross-sectional analysis is where you compare one company with another. So this particular assessment and feedback session will be looking at both vertical analysis and horizontal analysis. So let us look at the question that we'll be working with. So here is the question. Chapter Protection Limited is a security firm. Its statement of profit or loss for the year ended at 1st of December 2024 as follows. So you got the profit and loss account, which I have replicated here on the spreadsheet. Now, we are asked to prepare a vertical analysis statement of chapter protection statements for profit and loss on the basis that the revenue figure is 100. So the revenue, as usual, is the base item, and everything else is compared to the revenue. So because the revenue is the base item, the revenue will be 100. Basically, when you divide something by itself, it is 1, so which is 100%. So we start with the revenue, which is 100. The next item is to take the figure of cost of sales, and then we divide that by revenue, and we multiply that by 100 to get the percentage. So which means that cost of sales is 61.4% of revenue. Similarly, for gross profit, we'll take the figure of gross profit, and then we'll divide that by the sales. Remember, we're comparing everything to sales, and multiply that by 100, which is 38.6%. We do the same for administrative expenses, which is 14,260. We divide that by the figure of sales, and then we times that by 100. Again, that is 7.6% of sales represent our administrative expenses. And for distribution costs, we take that figure of 20,180, we divide that by sales. As always, we multiply that by 100, which means about 11% of sales is covered by distribution expenses. You can see straight away that we are spending more money on distribution than we are on administrative expenses. So for the gross operating profit, we do exactly the same. So we divide that by 100. As you can see, everything is multiplied by the base figure, which is the revenue figure. And so we can do the rest like that. And that really is the answer for that question, which is common size analysis. We simply take every item and we divide it by the base figure, which is in this instance revenue. And so, just to finish off this question, you then have that divided by the sales and multiply that by 100. And similarly, we've got this divided by sales and then multiply that by 100, as we have done all the way. And the final item is the net profit, and we can divide that by sales and then times it by 100. So that is the answer to that question. So by looking at this, we know that 61% of sales is covered in cost of sales. So the gross profit we have is 38.6%. So this, in fact, is a ratio analysis. Now, the next question is that of Causeway Ferguson PLC. Again, I've created the format here. So let's start with Causeway. It's a trading company specializing in the supply of tea and coffee and related products. Jason has a small shareholding in the company which was left to him by a relative. He has never taken much interest in the company's activities, but has noticed that the company pays a regular twice-yearly dividend, which never seems to vary much. Jason has recently started reading the financial press on a regular basis, and one day he finds a brief news item about tea and coffee supplies. Causeway Ferguson is mentioned in passing. And in quotes it says, Causeway Ferguson, a fine old name in British tea supply, is quietly withering away. Its lukewarm management team has failed to tackle new competition in the market. At this rate, it starts to look like a modest takeover target for one of the food industry big boys. Jason never throws anything away, and after a search, manages to dig out from a dusty pile of papers a set of unopened annual reports from Causeway Ferguson going back over 4 or 5 years. He gives the reports to his cousin Jasper, who is a trainee accountant, and asks him to comment on the company's trading over the last few years. So we have extracts in the following statement of profit and loss information from the annual report. So you got 2016, 2015, 14, and 26, 2006, 20X5, X4, X3, and X6. Question says, prepare a horizontal trend analysis statement and a common size statement of profit and loss. So we're asked to prepare both the horizontal one and the common size one. Then comment on the key features which emerge from the analysis of these statements. Does the newspaper report appear credible in the light of the analysis? Right. To answer this question, we will first look at the horizontal trend analysis. Now, when you look at the information provided, we are looking at 2 years. Basically, what is the change between 20X2 and 20X3? Since there is nothing to compare 20X2 against in the previous period, it means we are going to start with 20X3 because that is what we have a previous period to compare against. So in this instance, we have 20X3, 20X4, 20X5, and 20X6 as I've laid it out. So effectively, what we are trying to do is to work out the difference between this revenue and that revenue. You calculate the difference, which to this extent is 427, I think. So the difference between this and that is 427. So you then divide that by the previous year period, which is that figure, and then multiply that by 100. So that gives you the change over the period. I repeat, you take 12,430 minus 12,003, which is 427. You then divide that by the previous year figure, which is 12,003, and then you multiply that by 100. An alternative, quicker calculation would be to take the 12,430, then divide that by 12,003 minus 1, because that one represents the 12,003, and then multiply that by 100. Let me try both ways, and you see that we'll have the same answer. So coming here, what we have is equal to 12,430 minus 12,003, then divide that by 12,003 times that by 100. And so that is a 3.6% change over the year. So between 20x2 and 20x3, turnover has increased by 3.6%. Alternatively, we could calculate this differently. The shortcut to it is to take the 12,430 divided by 12,300, then minus 1 from that, minus 1, and then multiply that by 100. Which is the same answer, 3.6. Basically, I divided this figure by that, and then minus 1. The answer is now multiplied by 100 to get 3.6%. Again, we can do the same for 2014, 20x4. For 20x4, it will be 13,602 minus 12,430. The answer is now divided by 12,430 times 100. Let's do that. So you got 13,602. Deduct from that 12,430. And then divide that by 12,430 times 100. I think that is a minus, which is 9.4%. Alternatively, I could simply have done this differently by saying this is 13,602 divided by, that's 13,602 divided by 12,430 minus 1. Because we are dividing by itself, we remove that 1, times that by 100. And it's the same answer, 9.4. So this way, what we are doing is working out the differences in sales. This means that between 20x3 and 20x2, the sales has increased by 3.6%. Whereas between 20x4 and 20x3, there is an increase in sales by 9.4%. And so doing that of 20x5, again, we'll take the figure of 13,561, which is this figure, 13,561 minus 13,602. We can see there is a reduction in sales this time, minus 1, and then we times that by 100. So we have a reduction in sales, and so the figure is now divide, not minus. It's a reduction in sales of minus 3.3%. And finally, for this figure, we take exactly the same, which is 13 in 20x6, 13,204. As you can see, there's also a reduction here, divided by 13,561. 561 minus 1. And then we times that by 100. So basically, the sale is declining. it increased in 20x4, but it started to decline in 20x5 and 20x6. You can see the decline is getting bigger. And so we can do the same for cost of sales, gross profit, administrative expenses, for all other items. We can do exactly the same. And that is our horizontal analysis, by comparing one year with another. We're comparing the current year with the previous year. We're comparing the current year with the previous year. Remember, there are two ways of doing the calculation. One way is to take the difference between these two, this minus that, divided by this figure, times 100. Alternatively, you can divide this by that, then deduct 1 from your answer. You then multiply that answer by 100. Both methods will give you exactly the same answer. The question also asks us to also prepare the common size statement of profit and loss. This is exactly what we did before. So if I just use 2016, it means that the revenue in this instance will be 100, because that is the base figure. And then in terms of the cost of sales, that would be minus 88012 divided by the revenue of 13204 times 100, just as we've done for the first exercise. So that means the cost of sales is 61%. So we can do all of this for the rest of them. So if I just round this to one decimal place, like this, and then we'll have the same, just like the others, to one decimal place. There, to one decimal place. And so we can do the same for cost of sales and vis-a-vis. That is basically doing it. But on this occasion, we're going to have all 5 years, because we are doing it on a yearly basis when we are looking at common size vertical analysis. Whereas with horizontal analysis, this first year is missing because we've got nothing to compare it against. Now, looking at the answer which is provided for you, you'll find that the answer is basically the same, which is provided. And again, for this bit, I've already done the first year. You can see it's 2.6 minus 0.3, 9.4, and 3.6. And similarly, you can see that the answer is the same. You'll find the answers there. You can see that if we look at this answer, each of the 5 years, there has been a fall in the gross profit. So you can see that the gross profit has fallen from 41%, 40.5, 39. There has been a fall, albeit a very slight fall. So it is not dramatic, but it is gradual fall. There were also some growth in the revenue in 20x4. As you can see that the revenue has increased in 20x4. So there was some growth in revenue in 20x4. But the last 2 years showed decreases, as you can see there. And the decline in revenue, together with a steady decline in gross margin, suggests that the company has some problems to address, which they must address. Administrative and selling expenses costs have increased year on year, and you can see them there. You can see that there's a slight increase in all of this. So by doing horizontal analysis, we're able to analyze the movements in the financial statements of the company. I hope that this little exercise is useful, but of course the answer will be made available to you. It would be a good idea to try them yourselves so that you can perfect your understanding of vertical and horizontal analysis. Thank you for listening, and see you soon. Bye-bye.